Good morning, folks. This is Dave Beatty. Hope you're all well. It's 9 o'clock. Let's get cracking. I'm not quite sure how long this will take, but yeah, let's go through it and see if I can help you. As I said, my name is Dave Beatty. I'm the Legislative Compliance Manager at HRTorQue. My experience is looking after PAY, UIF, SDL, COID, ETR, any issues that involve your payroll. So I'm the person who the payroll team would come to if there's challenges, there's interpretation issues, or you just wanted me to have a look at something. Obviously, it's important that the right stuff is put into payroll and that we don't have a situation where something goes in and then is perpetuated over a period of time and then only found out in an audit. I think it's also important that, if you are a payroll administrator and you are dealing with one of our teams, that you please run issues by them. Make sure that you make the right decision. Make sure that you know that the payroll people understand what you're saying. Just as a very, very brief example, a travel allowance. Now, a travel allowance to me means a fixed allowance that you give someone to finance a private vehicle to do business travel. Now, often the client is meaning money given to an employee to travel between one place and another. Now, in income tax, that would be a transport allowance, and it would be fully taxable, whereas a travel allowance is only 80 or 20% of it is taxable, and the employee would have to keep a logbook. So yeah, a bit of a nightmare if you get those concepts wrong. But yeah, today we're just going to chat about travel allowances, travel reimbursements, and subsistence allowances. Just going to give you some guidance and tell you what the differences are across the board. Okay, so the first point I'm going to go through is just what is an allowance, and not to get confused between an allowance, an advance, and a reimbursement. Now, there is a SARS interpretation note, and that is interpretation note 14. And what that interpretation note explains is what the difference is. So today, we're only looking at allowances, but just briefly to cover the other two, an advance is basically just paying an employee money that they're entitled to at the end of that month earlier as an advance or in advance, okay? And then what happens at the end of the month, obviously that amount has been paid already, so it's deducted from the net pay that they receive at the end of the month. It's not regarded as a loan because it doesn't go over a month, and second of all, it's actually money that the employee has worked for. Reimbursement, on the other hand, is the employee expends money on behalf of the company doing something, maybe go to the hardware store to buy some nails or whatever, and you just reimburse that employee when they provide a signed slip from their manager. Reimbursements are not taxable. But like I said to you, we're only looking at allowances today. And what I've done is I've just given you a brief definition of an allowance, and that is typically an amount of money granted by an employer to an employee in circumstances where the employer is certain that the employee will incur business-related expenditure on behalf of the employer, but where the employee is not obligated to prove or account for the business expenditure to the employer. So you can see the difference there. With a reimbursement, you are obligated to prove the expense so that you can be paid tax-free by your employer. An allowance isn't that process. An allowance is just the employer giving you a fixed amount of money that they think you're going to expend. And normally it's good practice for your employer to quantify that amount based on a real estimated of expenditure. SARS caters for taxable and non-taxable allowances, and most of these allowances are going to be taxable. So just, I've mentioned they're administratively easier. Let's just use a common one, cell phone allowance. So, you don't want to go through the drama of acquiring a cell phone in the company's name and having to every month work out what the employee's spend was, what the private expenditure, and then the recovery is. So you just say to the employee, look, I think you're going to spend 500 Rand a month on business calls. What I'll do is I'll give you 700 Rand because there's going to be a tax implication. And every month you're going to get 700 Rand in your pay, and that is to cover those expenses. Now, there's no obligation in that case to provide any slips to your employer. It's good to put it on the employment contract or the appointment contract to say you are going to get this, and it is for making calls. So then there's no excuse for that employee not being able to call a client during the day while they're on the road. Okay, probably the most common and the most controversial allowance is the travel allowance. We have it on good authority that this is under the SARS gaze at the moment, and that this might fall away pretty soon. But let's just deal with what we know at this point. So the travel allowance should only be granted to employees who are required to travel as a result of their business. Now, okay, so first point is a very good point in that you cannot be the director's PA and receive a massive travel allowance because they're going to ask why that would be appropriate. If you're the client liaison manager, more appropriate, or the rep, definitely appropriate. So a travel allowance is granted to finance an employee's business travel using their private vehicle. Okay, so it's not to fund a vehicle in full, because remember, the vehicle is their private vehicle and their vehicle is used privately. So travel allowance is meant to be quantified to cover the business-related travel that the employee is likely to incur or undertake, and the expenses they incur using their private vehicle. So, as I mentioned, the fixed travel allowance should be only issued to employees who are required to do substantial business travel, and it must be a contractual requirement to travel. So, please don't issue the travel allowance without putting it in writing as an addendum or in the employment contract. SARS love to go to the employment contract and say that there's no requirement to travel, so we're going to disallow the travel. I recommend that companies assess the travel allowance issued to employees on an annual basis to make sure that it's appropriate. As I've said, situations change. Employee might get a promotion from rep to sales manager, and that might require less travel. So giving a person a travel allowance that's not appropriate will also be frowned upon by SARS, but it will also potentially put them in a difficult tax position if they can't justify the mileage. And for the less honest of them out there, it also creates an opportunity for more fraud in that they can make up travel to get a bigger tax refund. So situations do change. Don't forget that. The value of the travel allowance must be calculated according to the cost of the employee's vehicle and the business and total mileage that they expect to do. I'll say they do not get pressurized by the employee to put in a value. You would have probably heard of cases like, my previous employer gave me 20,000 Rand a month. Now, you don't really care what the previous employer did. You are the new employer, and you have to account to SARS if there is a query. So I advise you to be mindful of the rules that I'm going to discuss with you shortly. An example of how to arrive at the most suitable travel allowance for a particular employee, taking into account the cost of their vehicle and their estimated mileage, is reflected on the next two slides. Okay, so you might have seen this when the new budget came out, or you get the little handbook that most of the accounting firms hand out, but this is a travel table that SARS publish, and this is the table that SARS use to calculate what your travel deduction is going to be. So if those of you with the travel allowance, when you put figures onto your tax return, so you put the cost of the vehicle, you put your opening and closing mileage, you put your business mileage, okay, behind that system is this table. So in the example we're going to use in the next slide, if we go to the third level of this table, on the left, that is the value of the vehicle. So for vehicles between 201,000 and 300,000, there's a fixed cost element of 89,119. There's a fuel element of 184 cents, and there's a maintenance cost of 63.5 cents. Okay, so we can now move to this calculation, and don't be daunted by this. Have a look at this in your own time afterwards. We'll quickly go through it now. But like I said to you, the example is of a car of 250,000. So it falls into that third band. And as we know, the fixed cost of the third band is 89,119. The employee then is going to tell you what total mileage they do. And in this case, it's 15,000. So to get the fixed cost per kilometer, you have to divide that 89 into 15, or the 15 into the 89,000, and you get R5.94.1. Okay. So going back to the table, remember, you've also got 184 cents for fuel and 63.5 cents for maintenance. So coming back here, the next step is to add the 184 cents, or 184, and the 63.5 cents to that fixed cost per kilometer to get a total cost per kilometer. So in this case, it's R8.41.6. Now, if you are submitting a tax return and you did 8,000 kilometers, okay, SARS would go, your deduction is that R8.41.6 times by the 8,000 kilometers you did, you're going to get a travel deduction of 63,328 Rand. Okay. All we've done here is to make sure that our travel allowance is tax-free. We've used this as the basis of calculating what would be a nice monthly travel allowance for a particular employee in this situation. Excuse me. I tend to go a little bit above what I calculate on this, because it's important to note that SARS will only give you a travel deduction up to the maximum of what travel allowance you received. So it's no good getting a 67,000 Rand travel allowance if you qualify for a 90,000 Rand deduction when you do this calculation. SARS are going to limit your deduction on your tax return to the 67,328. So as I said, if I calculate in this example, 5,610 Rand travel allowance, I would normally go 6,500 just to be safe. Other important issues: the vehicle's title need not be in the name of the employee using the vehicle. So if you're driving a vehicle that belongs to your spouse, not a problem. SARS don't care. SARS might ask for proof of purchase. The only reason they do that is they want to prove that the cost of the vehicle that you're putting on your tax return matches the cost of the vehicle on the invoice. Like in my case, both of our vehicles are in my name for insurance purposes, but the one vehicle is clearly my wife's car, so she uses that vehicle on her tax return, and I don't use that vehicle. So a third-party owned vehicle can be used by the employee to make a travel deduction, okay? Provided it is not used by the actual owner to make a similar claim. So my wife couldn't, we couldn't share a car and then both claim the same kilometers. That obviously would not make sense. And with SARS new AR capabilities, people will be caught out by that. Very importantly, you cannot receive a travel allowance for a vehicle that is owned by your employer. You certainly cannot also get a company car and a travel allowance. It just doesn't make sense. So if you are using a vehicle owned by your employer, that's a company car and there's fringe benefit tax according to the legislation, that's not a travel allowance. Having use of a company-owned petrol card or being reimbursed for petrol expenses is treated the exact same way as the fixed monthly travel allowance. So should you get a 5,000 Rand travel allowance and you get reimbursed 3,000 Rand roughly a month for petrol, in the payroll, you're going to be taxed 8,000 Rand as a travel allowance because the fuel and the fixed travel allowance have to go to the same IRP5 code, namely 3701. What a lot of employers do is the petrol is added to the payroll in arrears because the invoice from the company, the bank, or whoever manages those petrol cards generally only comes after the payroll run. Important to note that if you get a travel allowance, whether that be fixed or you just use your vehicle and your company gives you a petrol card, in both scenarios, you have to keep a logbook in the format that SARS require. Okay. Traveling from home to your office is not business travel. Please don't get caught up in that. I deal with those challenges on a weekly basis. Employees upset about either the use of a company car or a travel allowance and thinking that mileage is qualifying mileage. It's not. Obviously, if you're working from home, your home becomes your new place of work, and any travel to a client is business travel. I know there has been some drama up in Gauteng with some of the auditors there regarding the interpretation of when business travel starts. So if you go from home to a client, you can only claim the portion of travel. Say you do 100 Ks and it's 50 Ks to work, you can only claim the balance of 50 Ks. So you can't effectively claim the first portion that would be your travel to your office. But yeah, I'm happy to challenge that because that doesn't make sense. You don't go to your office first to go to a client just to get a travel amounts. Okay, so as soon as you get, I have mentioned, as soon as you get a travel allowance or a petrol card, you have to have an accurate logbook. And, I recently have had quite a few cases where low-level employees have had use of a petrol card, and all of a sudden they've got a travel allowance, and all of a sudden they have to submit a tax return, and that creates stress and costs. So be careful giving an employee the use of a petrol card because it has the unintended implications of administration to SARS and challenges, and they could owe money. Rather go the travel reimbursement route, which we'll explain later. And as I mentioned earlier, SARS will limit the travel deduction to the amounts reflected under code 3701, 3702, and 3722. Quite important, travel allowances must not be disproportionate to the other package components because this suggests aggressive salary structuring and you're going to get an audit. You're also going to get, as I said, with the new artificial intelligence that the SARS are utilizing, these types of things are going to come out of the woodwork and you're going to get an audit. You can't this goes back to, sort of discipline in the payroll space. Don't get pressurized into giving an employee what he wants just because they shout the loudest. You have an obligation to comply with legislation, and the buck stops with you. So the golden rule that I apply is no employee should be working for a travel allowance. And just to go back a step, the way SARS regarded travel allowance, when you employ someone, you employ them on a package, right? So say it's 100,000 a month. You shouldn't be including the travel allowance in the package because you're agreeing to pay the employees X money to do their job. The travel allowance should be in addition to their negotiated salary package. But we all know that people don't do that. We all know that every single employer goes, my cost to company is 100. They go to the employee and they say, well, you qualify for a travel allowance, or we want to give you a travel allowance to reduce your tax. How much do you want? Now, if you are in that second scenario, I always say that you shouldn't go. The travel allowance should not be more than 35% of the cash elements of their pay, not of their cost to company, cash elements. So if the person's on a 100,000 Rand package and only 65,000 is actual cash, the rest are benefits, I wouldn't go over 35% of the 60,000 or the 65,000 as your travel allowance. It's just bad practice. Then another thing that the employer has to take note of is the employer has to decide whether 80 or 20% of the travel allowance is going to be taxed on a monthly basis. Now, 80% would be used if the employee is unlikely to travel more than 80% business purposes. Okay. So if you're traveling 50-50 between private and business, then your employer will use 80%, 80% of the travel allowance to be taxed monthly. If you are a high business traveler and you suspect that 81% of the travel allowance is going to be taxable, 81% of the travel is going to be business, then you can happily put in the 20% of the travel allowance is taxed on a monthly basis. It doesn't make sense to tax the employee at 80% in that case and make them wait for their refund on assessments. SARS are giving you the option of taxing 80 or 20. And then the last point on that page, it's important to note that you can't tax travel allowances at 100%. Prior to 2019, some people did, and I'm not sure why they did. I think they felt guilty that the travel allowance may be dodgy, and they just wanted to say, well, we taxed them 100%. But that doesn't really matter because as soon as you give someone a travel allowance on assessment, you're giving them an opportunity to claim a deduction. And if that employee doesn't qualify for a travel allowance, you are effectively allowing your employee to commit fraud by making up a logbook. Travel reimbursements. Now, also an area, quite a technical area, and an area where employers make mistakes. So travel reimbursement is an alternative to providing an employee with a monthly travel allowance. And what you do here is you pay the employee at a rate per kilometer for business travel undertaking. Now, obviously, with that comes more administration because they're going to have to give you some sort of a logbook. And you're going to have to check that it's legitimate, and then you're going to have to put it in the payroll. But if you pay the SARS rates, it's tax-free, and the impact on the employee ends there. Now, as I said to you in the beginning, SARS are pushing for travel allowances to be done away with because they understand that there's fraud perpetuated here, and for only reimbursements to be used. So that would be quite interesting to see how much reimbursements went up, because that's going to show whether the employees were actually incurring business travel, because you're going to be less likely to hand in a fraudulent logbook to your employer because you know you're going to get fired because that's cheating, then someone submitting a fraudulent logbook to SARS, SARS is just that faceless entity, where you don't know them. So people feel a lot more comfortable committing fraud with SARS than committing fraud with their employer. So as I said, it is a reimbursement at a rate for actual actual business kilometers undertaken. And that rate as of this 2025 tax year is R4.84 per kilometer. In reality, you can reimburse an employee whatever you like. If you go over the R4.84 per kilometer, there are rules, and it becomes a little bit more complicated for you. Becomes a little bit more complicated in the payroll, and it also becomes a little bit more complicated because the employee then has to keep the logbook and submit a travel claim to SARS. I've mentioned that the process of reimbursement changed fundamentally as of 1 March 2018. Previously, the rates, prior to that, there was certain limits to the number of business kilometers that you could reimburse, but also the tax treatment of reimbursements above the R4.84 changed as of that period, and we'll go through these now. This is a bit of a mind bender, but there is an example, and you're welcome to ask questions if you don't understand. So we have some scenarios where let's just, for the sake of this example, the employer pays R5 a kilometer. So your first point of call is R5 is more than R4.84. So what does it do for me? Well, SARS introduced this new code 3722, and it's a PAYE taxable code. So if we go and look at the red bits down below, code 3722 is calculated by multiplying the business kilometers by the difference between the rate that you've paid and the SARS rate. So let's just look at the example. R5 per kilometer is paid by SARS. So in this case, the person's done 1 kilometer, okay? So the amount that goes to code 3722 is going to be R5 less R4.84 is 16 cents, okay? So 16 cents gets added to taxable income in this case. Okay, so the complication, if you're doing the payroll yourself, is you have to set up your payroll, obviously, to put the R4.84, which is the tax-free amount in code 3702. And what's that? 3702 is telling SARS, I actually reimburse the person above the SARS rates, or I reimburse this person and they get a travel allowance. So you put the R4.84 there, and you put the 16 cents in code 3702. So that tallies up to the R5. Now, as I said earlier, it is much easier just to go with the SARS rates, because if you go with the SARS rates, SARS don't tax it. They don't tax it monthly, and they don't tax it on assessment, and it goes to code 3703. So my advice is pay the employees R4.84 kilometer, code 3703, tax-free, no logbook has to be submitted to SARS. As soon as you go over the SARS rates, as soon as SARS see code 3722 and 3702, SARS are expecting a logbook. Now, although the amount R4.84 is not taxed in your payroll monthly, it is taxed on assessment. So your employee has to keep a logbook in the SARS format and submit those details to SARS on their tax return. If they don't, SARS tax whatever's in these codes. So to make sure that they're not taxed, you have to say that you have done business kilometers, and then they do the calculation. And then hopefully that calculation matches what is in these codes so that the net effect is tax-free. Okay, so here's just a couple of examples. I'll just quickly go through them. You can see that in all cases, the employee's done 20,000 kilometers per annum for business. In the first scenario, that they've been reimbursed at R2.61. So we're all happy that that's under the SARS rates. So the 52,200 can go to code 3703. Not taxable on assessment. No confirmation required on your tax return. Same as the second scenario, 20,000 kilometers. You can see here the employee has been reimbursed at the SARS rates. So once again, SARS are saying that's fine. You're paid at the SARS rates, so the 96,800 is tax-free. Next scenario, we've got our R5 scenario. So in this case, as I said to you, you have to separate the R4.84 per kilometer and the excess. So in this case, although the reimbursement is 100,000, which is the 20,000 times R5, you have to put the 16 cents into code 3722. And the 16 cents times the 20,000 is 3,200 Rand. And you put the code 3702 as the R4.84 times 20,000. So simple. Okay. The next scenario, although you are reimbursing the employee at only R2.61, the employee also gets a fixed travel allowance. So where an employee gets a fixed travel allowance, you have to use code 3702. And you can put the 52,000 straight in 3702. You don't have to involve code 3722 because you are not reimbursing more than the R4.84. Ordinarily, if you reimburse at R2.61, so under the SARS rate, you don't have to put it in 3702. The only reason you do in this case is because the employee is also getting a fixed travel allowance. Now, the same scenario goes in the next case. You're reimbursing at the SARS rates. So the R4.84 times 20,000 will go into code 3702, and your code 3701 stays 10,000. That's not a problem. And then the next scenario is just a combination where the last scenario, you're paying the R5. So you all know that the 16 cents, the difference between R5 and R4.84 must go to code 3722. There it is, 3,200 Rand. The R4.84 times 20,000 must go to 3702. And in this case, the employee is going to pay tax on monthly on 80% of the 10,000 plus the 3,200. And as you can see, that is 11,200. So go through this in your own time. If you've got any questions as to the logic, I'll give you my email address. Please just drop me, and my phone number, and just drop me a email or give me a call. So I've said here it's advisable that employers consider the tax consequences of settling their reimbursement rates above the prescribed rates. I don't like to go above that rate because if the employee does a lot of business kilometers in that month, all of a sudden their tax is up, and then you get people knocking on your door and they don't understand the legislation, and they're not likely to understand the legislation, and it's going to create distrust between you and them because you're taking money out of their pocket. So as I've said there, employees' PAY will go up, decrease in take-home pay, staff queries rise. So I generally advise to reimburse at R4.84 because there's no PAY involved and there's no reporting required. The last bullet point on that page is the decision as to what travel policy to follow can only be made after doing the applicable tax computations to see which will be the most beneficial to an employee in a specific situation. Look, in reality, that might not be possible. It might be more difficult to do. I would suggest doing a policy that is going to be easy to administer and create the less risk to your employees. Travel logbooks, the bane of my existence. So there's no definition of logbook, but SARS do have an example logbook, and I'll show you that now. Um, remember that you have to prove to SARS on assessments to their satisfaction that you've done the travel. And I've crossed swords with many an auditor in the last 30 years on this process, because the legislation doesn't prescribe per se what must be in the logbook, particularly in the opening and closing mileage space. The legislation only says opening and closing. It doesn't say opening and closing every day. So I generally, when I do a logbook, have an opening and closing mileage each month. Between those two, I put all my business trips and what the mileage was. And then obviously the balancing mileage is private, which SARS don't care about. But the acceptable formats must have the dates of the travel, the um, business travel details. And I've said that they've become very strict. They want to know where you went specifically and who you saw and what the purpose of the visit was. So I generally will go the client name, the destination, say Pinetown, and payroll meeting or tax consult or something like that. So just to have that in a separate column will save you a lot of time and effort. And as I've said, if you've got a car that's less than 7 years old, keep all your purchase documents, etc., because SARS can query for that document. More recently, we have had cases where they've queried vehicles that are like 15 years old, and that creates a complication because we don't keep records for that long. Okay, here's what the SARS travel book looks like. I don't use this format. I use Excel monthly formats, a separate sheet for every month. But yeah, it basically gives you all the information that I've suggested. Now, fuel and oil and actual repairs, you only have to fill in that column if you are claiming actual costs on your tax return. Now, when you submit a travel claim, you can go two routes. You can go the deemed method, or you can go the actual cost method. The deemed method is just SARS using that table that I showed you earlier to do the calculation. And if you go the actual cost method, SARS will tally up all your costs on your vehicle for the year and then give you a deduction based on the proportion of business to total mileage. Very seldom does that give you a better result than the deemed mileage method. So I would suggest you just don't use the actual cost method for your deduction. Moving on to subsistence allowances, also hugely problematic. We generally find that employers set up these things badly, and this creates problems for the employees when they submit their tax returns. We've seen lots of problems in the expat place for this allowance. So today we're just going to go through this and make sure that you understand the difference between the concepts. So a subsistence allowance is an allowance given to an employee in respect of personal subsistence and incidental costs incurred when they're away from home, doing actual work, actual business. Okay. Previously, to get subsistence, you had to actually be away overnight, but that was changed in March 2021. If the employee is away during the day, you can actually give them this incidental allowance of 169 Rand to cover meals and any incidental costs without them having to keep slips. But for this purpose, it's important to note that the rates for subsistence are divided into two categories. One for subsistence and incidental costs. So where you give the person 548 Rand a day and you say, cheers, I paid for your accommodation. This is for your meals and incidentals. You can give them that for every day they're away, and they don't have to keep slips. And as I said, if they're only away, say they have left Durban to go to Kokstad for the day, you can give them 169 to cover meals and any incidental costs, and they don't have to keep slips. So I've mentioned the 169 day trip. Subsistence rates when outside South Africa. Now, there are different amounts. The 548 is only for when you're in South Africa. If you're outside South Africa, there is a rate per country. That table hasn't changed in at least 5 years, but that rate is in dollars, euros, pounds, and all sorts of currencies. So just, okay, there's an example. So if you were to go to Albania on business, the currency that SARS would allow you to be reimbursed in is euros, and their scientific methods say that 97 euros a day would be sufficient to cover incidental and meal costs. Okay, and as you can see, some of them are quite high. Australia, as an example, it's 230 Australian dollars. Angola, which I hear is a very expensive country, you would reimburse in US, well, the conversion to US dollars of $303. Okay. So, so you as an employer are given an opportunity here now. You can go one of two ways. And what I've done on this slide is give you some wording that you would utilize in the two scenarios. Okay. So the first scenario is you do not do the subsistence thing as per the SARS rates. So what you say is you are going to be away from your home on business purposes. We are going to either give you, or we're not going to give you, we're going to give you an advance up to a value of X per day, and you must keep receipts and incidentals, costs and that. And when you come back, you must do a recon of those. And then look, if we've paid you too much, you'll reimburse us the balance. And yeah, look, what I normally advise in this case is you don't allow them to spend more than that and say, look, we'll pay you the balance, because you know what human nature is like. If you don't give an upper value, people will push the boats out and be having seafood platters every day. So yeah, give them a maximum rate, advance them the money, and then they have an obligation to keep slips. If they don't keep slips, then they give you the money back to the company. The second scenario is you simplify things, and what you say is, we're going to give you, it's our policy to give you the SARS rate of 548 Rand per day for meals and incidentals. We've booked your accommodation. Go forth and be prosperous, and you don't have to keep slips then. Okay, so that's the easiest. But obviously you have to report the 548 Rand on the payroll. So just to summarize that, okay, scenario one, you say to the employee, we give you up to $200 a day to cover your meals and incidentals. Here's $1,000 because we think you're going to be away for 5 days. The employee comes back, does a schedule, puts all the expenses on it, comes to $970. They give the $30 back to the employer. No reason to put that on the tax, on the IMP5. It's all managed. SARS come in, you can show them the schedules, everything's signed off, everything's hunky-dory. Second scenario, you got the deemed SARS rates. You say, listen, it's our policy to give you 548 Rand a day for local travel, and for foreign travel, we give you the SARS rates as per the SARS table, and you're going for 5 days, so here's the money. Okay, the employee doesn't have to keep slips, and that takes pressure off the employer. All the employer has to do is ensure that they have actually traveled, because you can't give someone money and then they don't travel. So if they haven't traveled by the end of the next month, that money must come back to the company. Okay, this table is just the RP5 codes. You can read that in your own time. That's not important. Your payroll people will deal with that. What is important, though, is don't give amounts to your payroll administrator, okay? Because if you just give an amount, that person has no idea what your policy is. They don't know, they have no idea whether you're giving 548 a day, how many days. You have to spell out, I paid the person 22,000 Rand based on the fact that they're expected to be away for X days at X rates, because that gives your payroll administrator the opportunity to make sure that the right code is used on the RP5. If you use the wrong code, you are creating a problem for the employee, because once again, very similar to the reimbursement of travel. When you go above the SARS rate, SARS expect an employee on their tax return to justify the excess spend. So if you paid the employee 10 Rand more than the 5 Rand 48, the 10 Rand is going to be taxed on assessment unless the employee says to SARS, I've got slips to the value of 10 Rand. So we have too many cases where the wrong code is used, the person submits their tax return, SARS come back and say, you owe us 8,000 Rand. And then they come back and they say, well, HRTorQue or the payroll administrator is clueless. You haven't taxed me properly. And then when I go through the codes, it's actually the employer's reporting responsibility error, and the employee hasn't been aware of what their obligations on assessments are. Just some application rules. Subsistence allowance may not be allocated as part of your employee's cost to company. Subsistence is paid over and above the person's salary. It's paid for the person to actually undertake business travel. So you can't say, listen, your cost to company is 100 grand, and what we've done is we've built in 10 grand there into subsistence tax-free because we think you're going to travel. You're going to get into world of pain with SARS if you do that. Do not do that. A fixed subsistence allowance cannot be paid to an employee who is required to relocate as a condition of employment. If you're going to send an employee on a short term, say from Durban to Nasna to open a new development or whatever, and they're going to be away for a couple of months, you can pay them subsistence by all means. But there comes a point when that person, when SARS will look at that person's circumstances and say, no, I want to see the paperwork, I want to see the employment file. You transferred this person there. That person's now home is effectively Nasna. You can't give them subsistence, and then that's going to create a problem for you as the employer. Okay, so here's some common allowance RP5 codes. You know, I've seen some weird and wonderful allowances, well, over the last few years particularly. Employers get held over a barrel far too often to pay employees additional money for various reasons, particularly when the unions are involved. But you can see the most common code there is code 3713. It's what we call other taxable allowances, and you would put anything that doesn't have a specific code into this code. Common allowance faults. What we at HRTorQue have recently decided to do is look at the coding on payrolls, and I'm talking about payrolls that we take on from other people. So it's quite common for us to take over a payroll from another payroll company or from the actual company itself, where the payroll is set up. Now, your biggest mistake in payroll is assuming the system is correct. Okay, a payroll system is only as good as a setup. Everything is coded. Everything has got pathways. So if you put something in a field, it's going to go to a certain code. If you don't know how to set up COID earnings, as an example, your workman's comp, I often see the Sage payrolls, only basic pay is going to COID. You're going to have a serious challenge when you get a COID audit. They're going to come there and they're going to say you've totally underprovided for workmen's compensation because 3/4 of your variables are qualifying earnings for workmen's comp, and you've only included basic pay. So, we've learned a lesson in terms of the revenue codes and the deductions codes also, to have a look at these and to ensure that they're correct. And the types of things that we often find is, firstly, the setup of the retirement fund is critical. The rules of your fund will dictate what the percentage calculates on. If we don't set that up correctly, the employer could be paying too much to the fund, or you might be underpaying because, as an example, your rules might say that all allowances must be included in the retirement fund calculation and not just basic. So the unintended consequence of not coding things properly is you might have allowances going into code 3601, which is your basic income. And if the rules say that retirement funding is only calculated on basic income, then you are inflating the calculation, and that has other implications. The second biggest issue is annual payments. Now, in terms of payroll has worked on an accumulation and a process where you look forward over X number of months. So in month one of your payroll process, if you put in pay of 10,000 net pay, basic pay, the payroll system will project that forward and say 10,000 times 12 months, 120,000. What is the tax on 120,000? Divide that by 12, and then tax that 1/12 will be deducted in month one. So the process goes like that every month, doing a recalculation if your pay varies. Now, what a lot of employers do is they put annual payments into this projection codes. So the person's tax fluctuates. So you put a incentive bonus as an example to code 3601. The payroll system automatically is assuming that that's going to be paid every month from now on. So it does this projection, and the tax in that month is artificially high. Now, obviously, it corrects itself the next month when there's no incentive bonus the next month. But you can avoid this by putting all such bonuses to an annual payment code like code 3605. Now, what that does is it tells the payroll to do the projection for 12 months and then only add this once-off payments at the end. Okay, so it doesn't project to include the inflated annual payment. That's only going to happen once. Although it fixes itself up, you're going to have very unhappy employees with wildly fluctuating tax if you don't have your codes right. The other issues that I'd like to highlight is allocating travel allowances in inappropriate situations. I often see policies that say, as soon as you reach management level X, you qualify for a travel allowance. SARS will do their nuts if they read that, because what that's saying is you're getting a travel allowance based on your seniority, not on your job description. So it might be a rep, middle of the road in terms of the organizational hierarchy. You qualify for travel allowance because you're traveling. One of the senior line managers 10 steps above you doesn't necessarily qualify for a travel allowance. If that's the factory manager and he only spends time in the factory, his seniority has no bearing on the allocation of a travel allowance. And then the all too common one is employers getting pressurized into paying too many different allowances. Don't go down that road. It just complicates things. It makes the payroll unwieldy, and you're making a rod for your own back. Okay, that's that. just want to see if there's any questions. I don't know.
There's no questions at the moment there.
No questions. Okay, so what I'm going to do is, should I? I think, Charles, if you can just send out, when you send out the slides, my phone number and my email address, and yeah, and then people can contact me. Look, folks, obviously, I work for HRTorQue, and this is a business. I don't mind literally having a small chat relating to the webinar on your issue. But obviously, if there's going to be consulting and review of things, then I will need to tell you what my hourly charge rate is. I still think it's a worthwhile investment to make sure things are right. But as I also said to you, your payroll administrator is actively watching for a lot of these things and will bring issues to my attention that I will try and fix so that we don't have problems. Nothing worse than you being unhappy because you've got 10 employees and because you've done something internally that was ambiguous or problematic. So yeah, rather don't do that. Okay, but thank you for your time. Getting my time right. We've done exactly or almost an hour. Please sign on for as many of these legislative webinars, HR and payroll and tax, as you can, because information is critical to getting this right. As I said to you, SARS are doing AI and they've got algorithms that will make your mind spin. I'm on the board of the Payroll Authors Group, and we get to deal with the very top echelons of SARS. And I was chatting to an ex-SARS colleague at a branch yesterday, and they were telling me that the level of employee that they're bringing in is quite pitiful at the ground level. A lot of the spend is going to this high level, these IT types. So your auditors, I was a SARS auditor for 6 years. Those people, there's going to be less boots on the ground, and there's going to be more use of the AI software and algorithms to identify problems. So every time you hand in IRP5s, every time you hand in an EMP 201, 501, this system is doing calculations. You would have known of all the cases where queries come through, and I know that our admin team have to send multiple companies details in every month, schedules and reports and that to prove things. That is all as a result of this AI. So be careful. The same thing's going to happen on your personal tax returns. You change something, points are being allocated, and that dictates if you're going to get an audit. They're also going to be doing things like asking people to confirm if they rent, who they pay rent to. So, if you've got rental properties and you haven't declared them, it's just a matter of time before you're caught, because people are going to be forced to say who they're paying rent to. And the other thing is third-party information. You'll be shocked by the information that third parties are supplying to SARS. So your bank, as an example, if you do some dodgy deal behind the scenes and someone pays you 100,000 into your bank account, issues like that are going to SARS as to there's been some change. This person normally never has more than their salary in their bank account, and then it gets whittled down to the next payday. They've now got 100,000 rand transfer. Okay, that might be an inheritance, easy to explain, but we're going to start getting more of these queries. So important to get your payroll right, because your payroll is going to be the first step in dictating what risk you present to SARS, and then you're going to start dealing with these faceless people um, and their software. So yeah, tough times ahead. We haven't heard any more information on the monthly RP5 process. We were threatened with that, but I think SARS have taken a more pragmatic approach when they looked at all of the issues that we raised. But as I said, being on the payroll authors group, when information is available, I do an article or I will do a webinar and give you the heads up. Anyway, that's enough babbling from me. Thanks for your time. And
Dave, sorry,
yes,
you have a question in the chat function.
sure.
Our local and foreign subsistence allowance is not aligned with SARS recommendations. Should we align our policy with SARS?
You don't have to. As I said, you can do what you want. It's just gonna impact on how you report it. So, for example, let's just go back to that. You want to pay 650 to the employee per day to go to Joburg. That's more than the 548 Rand. It just means that in the payroll, you're going to have to use a different payroll code for subsistence, and that employee is going to have to keep slips and prove the difference between the 650 and the 548. Okay, so, but that is an education thing well, I can probably assume that in this case, you're not using the right code. So SARS wouldn't know at this point. Because remember, if you just put it in the normal SARS rate code, they're not going to know until they do a review and they see how many days and you've gone over. And then in that case, SARS are going to nail the company, not the employee. Okay. So you either stay at the SARS rate, keep it simple, go over the SARS rate, change your reporting and educate your employees as to their responsibilities. Otherwise, they're going to owe SARS on assessment. Happy to unpack that further if you want to give me a call, because I know that I say that, because I work with this every day, but it's important to know that going over the rates, whether it be subsistence or travel, creates more onerous situations for the employees. They need to understand their responsibility. And we all know that employees take responsibility for nothing and will come whining to the payroll if there is a problem. Charles, is that it?
Okay, there's one more that came in now. If an employee does not refund the unspent part of the cash advance from their employer after their travel is completed, at what point should we treat this that as a loan
Okay.
amount?
I wouldn't treat it as a loan amount. I would tax it in the next payroll. You don't pussyfoot around employees. Employees are like children. They will, if they see an opportunity, they'll take a chance. You have nice firm policy, not unrealistic policy. But if you go and travel, you've got 10 days or 7 days from your return to put the schedule together. I don't think that's unrealistic. So what happens then is, if the person travels and the payroll cutoff is the 17th, and their 7 days is only the 24th, then by the end of the next month, they've had more than enough time to sort that out. SARS are going to judge you based on your actions. And as an ex-SARS auditor, I went in, and on my first day, I honestly made a judgment on that company. If I went in and the payroll person was wishy-washy, there was no control, she did what the MD told her, whether it was right or wrong, I would spend ages on that actual element of the audit, because I knew that that's where all the dodgy stuff was. I knew that I could go and look at the cash book and find all sorts of problems. Okay. So your cash book must be clean. Payments to employees. Okay. Anything related to remuneration must go through the payroll. You don't have to reimburse through the payroll. Reimbursement is fine off payroll. But if they start nonsense and start dragging their feet, SARS are going to come to you and they're going to look at you as the employer as to why you didn't now treat that. So you could always make it a disciplinary thing. If they don't meet the 10-day or the 7-day reporting requirement, they get a letter. Because what you're doing is you have access to your employer's money, and you're now outside policy. It's not something that you must mess around with.
That's it, Dave.
That's it. Thank you, folks. It's been a pleasure dealing with you. As I said, you're welcome to send questions through. I promise I'll get back to them. Thank you very much. Have a good day.